Good afternoon, ladies and gentlemen. In 20 minutes, I'm going to have to try to talk about innovation skills and the Nigerian economy in 2018, which is what most people have come here to listen to. So first and foremost, let me thank everybody for the opportunity of speaking, and my colleagues who helped me put these papers together. First question is innovation, talent, skills, disruptive change, creative destruction. Are these buzzwords or do they really mean anything? So we'll have to answer that question. Secondly, what global and domestic trends are going to determine what happens in the world and Nigeria in 2018? 2018 is not like no other year in Nigeria. You've already seen with Obasanjo's letter and all of that, it's shaping up to be a very, very interesting year. We'll take a look at the economy outward in, inward out, so that somebody is coming, telling us from outside what the World Bank, the EIU, and everybody is. And then we'll look at what's going to happen to the economic indicators. We're going to look at the challenges and, more importantly, the opportunities. Then we'll look at the imponderables and the upside. So let me start off by saying that we've heard all the definitions. Stefan, Mrs. Woledeku, everybody has talked about what innovation is. I'm not going to bore you with that. The difference between skills and talent. But how do countries translate latent assets into tangibles? You can talk about all of this, but it has no impact. And how do you achieve growth, competitiveness, and social impact? So let's start today's intervention with conceptualizing the new normal and the changing world of 2018. And then before we look at these trends, let us see the connection and the correlation between skills, innovation, and superior economic performance. So the first thing I'd like to talk about is state-owned labs. Research was the job of the government before now. But then, recently, non-for-profits, private institutions, corporates have started investing heavily in research. What have we found? Clusters of innovative firms have sprung up in Silicon Valley, which has HP, Apple, Google, Facebook, and Uber. In India, Bangalore, we have Infosys, Wipro, Mindtree, and in Tel Aviv, they have a place called Silicon Wadi, where you have Aerobotics and Checkpoint. So these are clusters, and they have actually helped to make things happen. But is it true that if you invest in innovation and creativity and talent, that the result is always positive? There's an MIT professor of economics and a Nobel Prize winner called Solow, and his theory is called the Solow's paradox, which actually proves that between 1970 and 1990, in spite of the technological revolution, that productivity actually declined in the United States and wages dropped and output stagnated. So, like a typical economist, they try to relate it to the law of diminishing returns, that if you increase certain inputs, you can end up having diminishing output. But it has been proven subsequently that the Solow's paradox is a fallacy, in the sense that what happened in those days, in those years, was that was the time of the great crisis. So if you didn't have the digital revolution, if you didn't have the technology breakthroughs, you would have had even a worse recession, a worse global crisis, and so that helped. It also, the transition from a production economy in the United States to becoming a service economy also did not, so there was a displacement effect. As one part of the economy was falling away, the other part of the economy was actually beginning to emerge. So in the end, in economics, we have what they call the PPF, that is the production possibility frontier. The whole idea is to push this outward to the right, and everybody in the country should benefit, theoretically. But even if you increase productivity and you increase output and increase GDP, if the income is not equitably distributed, like what we saw in India, where the rich became so rich and where they became so poor, then you could have negative outcomes. So you have to look at income growth, GDP growth, and inequality of income and inequality of opportunity, which we have seen in Nigeria, creating the tension that you see today. So the lessons from this are that, if you go to one of the slides there, the next one, you find that the countries that invested most in the innovation index, number one in the world, because there's investment in innovation and research and there's investment in education. And let me stop here. The country with the second largest investment in education as a percentage of GDP in the world today is Zimbabwe. Yeah. And almost every skilled worker you find in South Africa today is probably of Zimbabwean origin. I just want you to know that. But Zimbabwe as a country itself has not done so great. So the fact that you invest in education is a necessary condition, but it is not sufficient to ensure that you, right? So there's what we call functional education and dysfunctional education. So going back to where we were, Switzerland has the highest investment in innovation index, 1.2% GDP growth. GDP per capita is $75,000, followed by Sweden, and go all the way to the end, you get the life expectancy. Sixth highest life expectancy in the world in Switzerland, 83.1 years. Sweden, 82.3 years. Netherlands, and it goes all the way down. Nigeria has GDP growth of 1.4, income per capita of $2,400, and number 152 in the HDI ranking. A life expectancy of 53 years. So, but in terms of, if you look at the country with the highest life expectancy in the world is Monaco. Monaco also has the highest broadband and internet penetration and spend in the world. In fact, telephones, they have 128 telephones for 100 people in landlines alone in Monaco. And so, you want to see the connection between these things. Now, when you take research and development, the most competitive economies in the world are Switzerland, Netherlands, United States. We've talked about that. But in terms of nominal spending, the United States spends $463 billion a year on research and development. China, $377. The European Union, $346. Japan, $155. And South Korea, $74. But you want to take a look at Japan. Japan has no raw materials, has nothing. All Japan is made of is rock and water and occasional earthquakes, right? But technology has done everything, right? For them. Toshiba, Toyota, everything. It's all about technology. Now, which companies have the highest spend on research and development in the world? Amazon, $17.4 billion. Volkswagen, $15.1 billion. Alphabet, which is Google, $14.5 billion. Intel, $12.8, and Samsung, $12.8 billion. Is there a correlation between R&D spend and success? Yes, there is. The top companies by market capitalization in the world, top 5. Number 1 is Apple. Number 2 is Alphabet. Number 3 is Microsoft. Number 4 is ExxonMobil. And number 5 is Amazon. Of these 5, 4 are in the tech-heavy business. Top companies by profitability in the world, number 1, Apple. Number 2, Alphabet. Number 3, Samsung. Number 4, Toyota. Number 5, Microsoft. In 1988, 50% of the companies on the Dow Jones 30 were manufacturing, and 16% were commodity and energy, and only 6% were tech. 30 years later, today, 33% is manufacturing, 16.7% is tech, 13.3% is financial services, and commodity and energy, which was as high as 50%, is now down to 10%. So, who are the companies that were there in 1988 that are still there today? People like 3M, no, the ones that are present today are American Express, Boeing, Chevron, Coca-Cola, DuPont, ExxonMobil, and General Electric. Present today, you have 3M, Caterpillar, Goldman, Home Depot, Intel. Then look at the other ones: Nike, Microsoft, Pfizer, Verizon, Visa, and Walmart. Not to bore you so much, in Africa, R&D as a percentage of GDP, Kenya is 0.8, and Stefan talked about it. R&D spending $788 million. South Africa is 0.7 of their GDP. Ethiopia is third, 0.6. Ghana is 0.4. Nigeria is 0.2. Number of researchers per million inhabitants. In Kenya, there are 230 people out of 1 million who are researchers. In South Africa, there are 437. In Ethiopia, there are 45. In Ghana and Nigeria, there are 38 people out of 1 million. But the good news is that Nigeria, 65% of the research is done by universities, 35% by government, and almost 0% by business. And that has to change. In South Africa, it's 29% by the universities, 47% by business, and 24% by government. So you get different outcomes. In the United States, 71% by business, 11% by government, 14% by universities, and non-for-profits, 4%. Now, in global ranking of entrepreneurial people, because there's no technology, people become entrepreneurs and all of that. In the world today, of the top 10 countries in entrepreneurship, only one is not African. Number one in the world is Zambia. 40% that is 40 in 100 Zambians are entrepreneurs, either full-time or side entrepreneurs. Senegal is number 2, 38.6 in the world. Number 3 is Nigeria. So 36% of Nigerians are either working or trading, or working and trading. Uganda, you can see. So there's a nascent, we talk about SMEs, that's what it is. Then, interestingly, there's what we call migration relationship with remittances, foreign remittances. You go to the next slide after this. I'm skipping the brain drain thing, which is not. Because if you look at the brain drain, actually, it's more to do with crisis. When you talk about Yemen and all this other, Bosnia, Venezuela, when there's crisis, people run away rather than economic opportunity. But if you look at this next slide, the one before this, I think. Yeah, you find that the immigrants, people that run away from their country, like people going to Libya, desperately going to Italy. Now, and on one hand, the immigrants, Mexico, India, Russia, and look at the other hand, remittances that go back in. Nigeria is number 6 in the world in terms of remittances coming back in. So your biggest export after oil are people. Because you are getting, it's down to $19.8 or something billion, but actually it's about $23 billion we are making a year from tracked remittances. But if you look at the countries, on one hand where there's immigration, and on the other hand where there's remittances coming back in, a balance. So having said that, 2 case studies, very quickly. Switzerland Government spending on education is 5.5% of GDP. Spends $16,000 per head, highest in the world. They have a GDP of $660 billion, 75% services, 24% industry, and 1% agric. What do they produce? Gold, pharmaceuticals, watches, and jewelry. Population of 8 million, 99% adult literacy, and produced 26 Nobel laureates so far of the 286. America has 286 Nobel laureates. But I'm talking about Nobel laureates in physics, chemistry, not peace. Okay? Peace is important. In Germany, on the other hand, 5% government spending on GDP, $9,000 per student, exports are $1.32 trillion, population of 83 million, life expectancy of 83 years, 99% adult literacy, $175 billion spent on education, $110 billion on research and development, produced 80 Nobel laureates. Nigeria, 1 Nobel laureate. 1. So, what are the global trends that will affect Nigeria in 2018? One is that US interest rates will go up. Electric cars will catch on. We are going to have more Tesla. There will be a dip in European retail spending. The stronger pound means that Nigerians who are in diaspora will remit less money back in. Universal healthcare will increase and improve, so medical tourism. So basically, we'll spend more here, but there will be less medical tourism. Russia's tourism will improve because of the World Cup, and Nigeria will benefit from that because at least we qualified for the World Cup and we're spending more money. It's better organized this time. And there will be higher demand and supply of gas. So those are the global things that will affect us. Now, how does the world view us? And I want you to look at the 4 points, the World Bank, the IMF, and you talk about digital disruption and creative destruction and all of that. They believe, the World Bank says that revised its GDP growth forecast to 2.2% in 2018 from 1.9, mainly due to what? Improved outlook for oil and higher dollar liquidity. Not about disruption, not about technology, not about education, not about research, but because of oil and high dollar. So everybody in this room is talking about what's the FX rate and everything is on oil, not about how to become more productive and push it. So fundamentally, you have to accept that there's something wrong in that. Then they say mainly it expects strong oil and agricultural output to be major drivers of growth, and concerns about policy implementation and market segmentation in the foreign exchange market. That's what the World Bank says. The IMF went further to say GDP growth will spike to 2.5% in 2018. How is it going to spike? Improve commodity prices, investments, and trade. That's all that Nigeria is going to. Nobody's talking about digital technology, nobody about anything. It's just trade, oil, and increased spending in run-up to the general election will help growth. That's okay. Political uncertainty likely to weigh on foreign investment. End of story. So I want you to contextualize. That is the view. And people see you the way you see yourself. So what are the trends that we cannot ignore in 2018 in Nigeria? One is e-commerce and the digital revolution. Second thing that we cannot ignore is immigration. You see, every time I see Abike Dabiri and others speaking about this, they go to Libya, they go to Italy, they go everywhere, and they're really concerned and passionate about it. But it's always reactive in the sense that how are we going to bring these people back and how are we going to rehabilitate them? But the problem is how not to allow people to go there in the first place. In a 30-minute program, 25 minutes was spent on how to bring the people. Medview has been taken to go and bring them back and all of this, and then the state governments, they'll find places to rehabilitate them. But that same day that these guys are coming, I can assure you that more people have gone off. So the problem is not about rehabilitating the returnees, right? So the exit barrier is very low, and the entry barrier, I think that's, so we cannot reversal of medical tourism. Another big problem we have is deforestation. 57%, Nigeria has the second highest rate of deforestation. We lost 57% of our vegetation in the last 5 years. And so when I hear this, what I call pseudo and quack analysis by quack economists about the herdsmen issue, people do not look at it in that context, that Lake Chad has dried up. The arid part of Nigeria has increased. The deforestation. Therefore, the grazing cattle that were eating up there where there's no grass, so desperately, they're moving in this direction. And the cattle doesn't belong to the herdsmen. The cattle belongs to a chief or an Alhaji who owns it, and the cows are interrupted, then they arm them with guns, right? And then the rest is... The conflict starts from not dealing with your deforestation in the first place, coupled with urbanization. So you will find the answer. I don't know what the answers are, but that is the problem. Arid soil, deforestation, cutting down all the trees. Not the dams are not there. The Baccalaureate and all these dams which were supposed to create all of these things. So the symptom of it is the herdsman. But the fundamental cause is not having a solution to afforestation and arid expansion. So other things that we cannot ignore are diaspora remittances, investment in upgrading academic institutions, functional institutions in Nigeria, fintech, challenging banking channels, forcing greater efficiency, and reducing transaction costs. Refocusing infrastructure spend to railways, roads, and pipelines. Of course, the creative destruction we mentioned. Displacement unemployment, compound structural and frictional unemployment, and equilibrium factor pricing, and phasing the subsidy distortion. So those things we cannot ignore, but will be with us. The issues that we cannot affect, that will affect us in 2018 are we have no choice but to accept a mixed economy. If controlled economy has failed, a free economy we are afraid of, so we're going to be in the middle. Affordable housing and shifting urban centers towards the right of way. Because we are the rail path is going to go through another direction. Our cities will move close to where the rail path goes, and so you're going to have right of way. If you watched television last week, Amechi and others were struggling with the Lagos-Ibadan Expressway, and people already fighting over the right of way. So that's going to come out. The implementation of import substitution and protectionism. We found out now that the car auto policy is a total failure. 70% duty has not done anything. So we have more second-hand, third-hand, and fourth-hand cars. And only 10,000 cars were imported into Nigeria last year. 10,000 new cars in the whole year. That's not up to what was bought in 2 blocks in the Bronx. Or, I don't know. But that tells you what it has meant. But there were cars in the country, but new cars. So, issues that will drive Nigeria in 2018, because of this thing, reduction in logistics and distribution costs, tank farms, refining and pipelines, because there's a big investment going on and this and going to change things. Food storage, packaging and distribution used for local input for processing. Reduced interest rate. We are going into a declining interest rate environment after 3 years of increasing interest rates, sharply declining, and a stock market correction which has started already. And again, there will be lessons to be learned, but retail and consumer lending. Then again, I saw 1 or 2 travel agencies and airlines now offering loans for vacation, which is an interesting thing. Travel now and pay later, all right? and then special software and risk management tools for consumer banking. So what will the indicators look like? I'm going to take out just about 2 or 3. The most important one being the exchange rate value of the naira. People here will say, okay, what the naira dollar rate going to be? First of all, the exchange rate structure will remain the same, which is a price discriminating monopoly. The CBN as a price leader with strong external reserves, they have 40 billion. The governor is saying it will get to 60 billion to support the currency. The oil flows have increased sharply because the only reason why your currency is strong today is because oil price is high, production is constant and high. So you're going to be doing $10 billion a quarter, $3.6 billion or so a month, compared to about 1.8, which we were doing 2 years ago. So the dollars will come in. However, because we are approaching an election year and interest rates are going to go up in the US, you are going to have some of the hot money that is coming into the IE window going out. So one will net out the other. The result of this is that there will be an election uncertainty which will increase the risk premium. And the PPP value of the naira today, which is 335, we think the naira will remain, IE window will be a reference point, and the IE window will decline this year, will depreciate to 370 from where it is at 360. It will be a shadow price for the parallel market with a 3% premium, but the parallel market will go in this direction. First quarter, where we are, it will go to 365, where it is. Second quarter, it will go to 370. Third quarter, 375, and fourth quarter, 380. Now, this is just speculation, but based on certain analytics which we have done. Interest rates, whenever the National Assembly approves the quorum, the policy rate will drop, but in this year, all the way down by 200 basis points from 14% to 12%. Treasury bill stop rates have already gone down, and so we think the average Treasury bill stop rates will go down to 10 or 11% per annum. Effective lending rates to customers will go down to about 18% per annum. And average deposit rates will range between 11 and 13% towards the end of the year, leading to negative real interest rates of 1 to 2%. The lower interest rates will prop up the stock market after a sharp correction, and people will buy Bitcoin, Swiss gold, and all sorts of things, MMM, all right? So there'll be a wave of corporate bond issues with coupon rates of 5 to 10-year bonds at about 10 to 14% per annum. And bond proceeds will be used to pay down bank loans, and the banks will reduce their risk appetite and become a bit more aggressive. Inflation, on the other hand, because MPR has come down by 200 basis points and money liquidity will increase, consumer price inflation will trend downwards to 14% and go back again after the following. M2 will increase to 26 trillion by about 12%. The velocity of circulation will spike because of digital payment systems. Minimum wage increase of 77% from 18,000 to 32,000, and having a wider effect because the minimum wage has gone up, other salaries, we think that we will have an average wage increase of 25%. We'll make a provision for that. And the exchange rate pass-through will push up retail prices by at least 2%. What does all of this mean? That growth in 2018 will be about 2.2%. Agriculture, recovery in oil production, infrastructure spend, but it's still below population growth rate and will not create enough jobs. Unemployment will still be at 18.8 plus underemployment. So, the sectors that will outperform the GDP are manufacturing, agriculture, telcos, education, and financial services. The sectors that will be flat will be building materials, petroleum, and trade. And those that will be slow will be real estate. Now, what does this mean in terms of oil price? Again, even though it's 68, we think the average will be about 55 to 60. And for the government of Nigeria, there'll be 3 main considerations in 2018. Number 1 consideration is political expediency. Number 2 consideration is economic necessity. And number 3 is material convenience. In other words, even though it's good to remove subsidies, it is not politically expedient, so tick the box. No, it won't happen. Oil swap arrangements to remain, tick the box. Even though it's not good, you'll do it. You keep tariffs to protect people, you do it. Those are politically expedient. Minimum wage review, even though you can't afford it, you'll do it. The economic necessity, whether you like it or not, you allow the currency move somewhat, and you will resolve things like a Etisalat, Nine Mobile, and you will just not allow, you will intervene in the energy sector to ensure that the energy companies stay forbearance. You will make sure that the banking system stays stable. The material convenience is that you do the right thing, but for other considerations. So amnesty payments will be made, IDPs. So you have all sorts of buzzwords, but beneath it are leakages to fund the campaign. So, what does this mean? I will just take only 3, in the last few minutes, 3 things that are difficult that also has an opportunity. Number 1 is real estate. Real estate, high vacancy factor, everybody's house is empty, no tenant, and all of that. Bad news, right? But there is the good news, right? Many years ago, Anastasia and I sat down and looked at Victoria Island before it was, and saw an opportunity on how, what we call developer finance structures. Location is real estate. But in the same location, you'll see a house that is fully taken, and you see houses that are empty. Why is one being taken at high rents and the other? So tenants and consumers are looking for upgrades. They're looking for the best value for money. So if you have a couple of empty houses and I have the cash, I'm ready to assume the risk. I'll take the house from you for 15 years, fix it, get a tenant, pay you an annuity, a certain amount every year, but the house is occupied, and then after that, I can sell the reversionary interest to you because you now have a tenant, you have cash flow, and the property has value for collateral, so you can collateralize like a collateralized obligation. So that'll be one area. So, but also there's affordable housing. In some areas where the rents are low, so you need to put low-cost housing. The cement manufacturers will do that, so I think that's something that is interesting. The other challenge that I think will not go away that can be an opportunity is the Apapa gridlock. Apapa is a mess, right? I haven't been in Apapa for 3 years, but I went there last Sunday. I had to go and see somebody. And quite frankly, I needed Google Maps to find my way out at night, because the whole place it's a jungle. And that problem is not going away very soon. Okay, so where's the opportunity in Apapa? What they call intermediate barging arrangement. That is, the ship is out there, and you have barges to go get the things, take it to a lighter terminal, and number 1. Apapa roads, of course, the opportunity there, rehabilitation of the roads, converting roads, payment in kind, deferred liabilities, and do construction. The bridges that have held these trucks for so long, I'm not an engineer, but I have a feeling that structural damage has taken place to Eco Bridge and all these flyovers. I think there's structural damage, and when you have that, there's a big opportunity for underpinning and rehabilitation of those roads, those bridges, all the way from Stadium and everywhere. Because those trucks, those bridges are meant for moving traffic, not static, with full payload. Rehabilitation of the Apapa Oshodi Expressway, linking it up with the airport road, because you now have an 8-lane road coming out, which will lead to a bottleneck when you get to Oshodi and all. So many things linked with the new airport road and the blue line, which is going to be opened very soon, goes to Orile but stops there. And so I think there's a lot of opportunity right away. And finally, I'll take a look at aviation. Aviation, when you look at the population of Nigeria, its income, Nigeria is 70% of ECOWAS income. Yet, 3 airports recently have been developed which challenges the hub status of Nigeria. Lome, I don't know how many of you have been to Lome lately. Lome, Accra has been upgraded and is being upgraded, and Abidjan. You're going to have a lot more upgrades. By the time you get your act together, you lose your hub status for interconnectivity and ease of. So, how do we get our aviation infrastructure up to speed? Concession of the airports have to be done with timelines, airport parking systems, cargo handling, air freight as a substitute to ocean freight, because of Apapa, people are air freighting, because you can't get anything from Apapa. So that's another opportunity, I think, something to look at. Now, finally, what are the imponderables? There are no slides on this. The imponderables are that we go into an election year and everything, it's 12 months to the election and everything is in play. But the best news is that because everything is in play, the government in power has to be efficient, has to be more effective, there has to be a sense of urgency. The opposition has to be energized. The demand for good governance brings about the supply of good governance. There's a theory on that in political economics. Now, what you're seeing today, which people call overheating the polity, there's nothing like that. It is the demand for good governance at the aggregate level leading to a supply of good governance. Within a minute of making any statement, the government responds and does something, right? So, all of a sudden, there was somebody who was the Secretary of Government who had been at home, was arrested all of a sudden within hours. That's supply of good governance, because there was demand for good governance, right? So, the demand-supply equilibrium. So, in all, I think the short term looks stable, the long term looks promising. But Keynes, the old economist, said that in the long run, so what is important right now is the short term. So the short term is stable, short term is promising. In the long run, we are not here. Thank you very much.
Okay.